Do you think the largest, most complex banks are roughly half are as risky in the threat that they pose to the financial system as a community bank in my district?
What you're neglecting to think about is the composition of the assets and the capital. They hold a much higher.
Yeah, but the big banks are the ones who keep failing, right?
No, many small banks.
Well,
fail
that's
too.
because they're getting pushed out. We're not actually supporting community banks.
I want to be polite, not say it's naive.
Yeah.
What the road you're going down?
Isn't it
for
low?
over 40
Do you agree
years.
it's low? It's
No,
still very low.
It's not relative to the historical level.
Thank you. Mr. Secretary, a bank's leverage ratio is important, right?
Well, there are numerous leverage ratios. Congressman, which one are you referring to?
So for the record, if I may, Mr. Chair, I'm going to submit the Bank Capital's Analysis Semi-Annual Update for the record. May I?
Without objection, so ordered.
I want to talk about the way that we look at global systematic important banks, what do you guys call it, G-SIBs, is that right?
That's correct.
That's what I'm talking about. They're banking organizations that could trigger a financial crisis if they failed, correct?
And they could trigger a financial crisis by not lending.
Yeah, so the leverage ratio is important when we look at it, right?
Again, I'm not sure which leverage ratio
Okay, so I'm
you're
looking at
referring to.
here, this chart, okay? It says Tier 1 capital. Does that help?
Tier 1, that's helpful.
Okay, so I know it's kind of hard to see, but the green line is the community banks. You see how high that cushion is? That it's about what, almost 11%? I know you can't see it. It's fine. I was going to enlarge it for you.
As an act of good faith, I'll take your word.
Yeah, so the largest bank capital analysis for the Federal Reserve Bank of Kansas City, it shows that last June, the Tier 1 leverage ratio of community banks was at 10.83%. For the banks that pose the largest threat to global system, what they call G-SIBs, this is the big banks, the ones who take all the risks. You know this, right? Their supplementary leverage ratio was about 5.8%. That's a huge difference, right?
Correct?
Okay, I'm getting there, I promise. Yep. Do you think the largest, most complex banks are roughly half are as risky in the threat that they pose to the financial system as a community bank in my district?
Well, I think, Congresswoman, that what you're neglecting to think about is the composition of the assets and the capital. So the capital at the G-SIBs can be much more liquid, where the banks in your community are much more, as we're used to seeing in the movies.
Well, let me explain to the public why community. Yeah, I understand. Community banks, though, lend out equivalent about 75% of their deposits to real economy. Some people refer to it as Main Street, but we call it the real economy, people, families, communities. The largest banks only lend about 40% of their deposits into our real economy. Instead, they rapidly expand their loans to hedge funds and private equity that you're calling they can liquidate, right? Is that what you're saying? Is that what you're saying?
No, I'm also saying, saying they hold a much higher.
Yeah, but the big banks are the ones who keep failing, right?
What's that?
The big banks are the ones who keep failing.
No, many small banks fail.
Well, that's
too.
because they're getting pushed out. We're not actually supporting community banks.
Well, as I've said, I think more than 100 times today, I support community banks, and what I don't want to see.
You could say it, but you got to do something about it. But listen, so Trump's
I've met with more than 200.
I know,
Mr.
Secretary, but this is pretty bad. So because the fact that community banks in my business have almost twice as much capital percentage-wise compared to banks that pose the largest threat to our financial system, that shows that just how much playing field's tilted towards Wall Street. You understand that, right? That's where the risk is. The big banks do far less for our real economy, for everyday people, and that's what I'm trying to say, because Trump's regulators recently, finalized a rule to modify the supplementary leverage ratio that applied to the largest banks. Many former regulators and experts have warned that such step will actually undermine the safety and soundness of our largest banks. The final rule will result in a reduction of about $219 billion, about 28%, in capital at the bank subsidiaries of global systematic important banks, G-SIBs. Again, my residents don't know this, but the thing is they end up with having to pay the cost when they fail. And so I'm just trying to stress to my colleagues how important it is, because Secretary, last November, didn't regulators reduce it, again, the capital requirement, right? Yes or no? They
again,
did.
Congresswoman, I want to be polite, not say it's naive.
Yeah.
What the the road you're going down, but much of the excess capital has been invested in the U.S. Treasury market, and keeping those yields low helps the borrowers who want a mortgage or a small business or an ag loan.
But are you paying attention how much they are lending versus community banks?
Yes, we pay very close
really
attention.
low.
I've been a financial
But isn't it
analyst
low?
for over 40
Do
years.
you agree it's low?
Sorry?
It's
No,
still very low.
It's not relative to the historical level.
Mr. Secretary, if you came to my district, you can go to Detroit or the suburbs. They will tell you the big banks do not loan to them. And if they do, it's predatory, it's not supportive. It's the local community banks that support them in owning home ownership and small businesses.
The gentleman's time has expired.
Congresswoman, you and I are in complete agreement.
The gentleman's time has expired. The gentleman from
except on the
California,
capital
Ms. Kim,
ratios.
is now recognized for 5 minutes.
Thank you very much. Secretary Bessent, it's really great to see you before our committee again. I want to thank you so much for working very closely with me on delivering the historic SALT relief to the tune of $40,000, because with that, my constituents in Orange, Riverside, and San Bernardino counties will finally be able to see the relief as they file their tax returns. The 4 times increase in the SALT deduction, coupled with other provisions of the Working Families Tax Cuts Act, will result in supercharged tax returns, helping more American families get back on their feet after the years of failed Bidenomics. Last year, you noted that Treasury would revisit the 2023 Guidance and Analytic Framework. And you also highlighted that FSOC has other tools, such as issuing recommendations to member agencies that are more tailored and precise than designation power. So Secretary Bessent, can we expect a new proposal for non-bank guidance that will be released sometime 2026?
We should expect that.
Thank you. I look forward to seeing that proposal when it's finally released, and hope there will be a public comment period to ensure stakeholders can weigh in and help shape that guidance.
Good. And the Congresswoman, the other thing that I would point out is we had a lot of talk about affordability today, and you were a great advocate for the One Big Beautiful Bill. And what we're seeing, unfortunately, in states like yours, that the state revenue authorities are not going to mirror the no tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans, so, which is very unfortunate. To the extent that anyone in the California delegation, whether Democrat, Republican, the New York delegation, should push their states to follow through for working Americans.
You can count on me on that. Let me shift gears now. I want to focus on the Community Development Financial Institution Fund. I was really happy and relieved to see that staff at the fund were restored after the conclusion of the Schumer shutdown late last year. I know that you share my view that the fund's work is critical to serving communities that typically do not receive the traditional banking services. So can I ask you how you are planning to make the fund more effective and efficient as we move forward?
Well, what we want to do is focus on community revitalization, not unrelated and ill-advised social policies. And we want to drive reforms, new restrictions on the use of funds, and we want to focus on the program's statutory intent.
I know
making the lives better for people in their communities.
Sure. CDFI fund, as you know, has bipartisan support, and I think it also has a bicameral support. So I look forward to continuing to work with you on the future of this critical program. But I also want to talk to you and thank you for being willing to come to California and investigate all the fraud, waste, and abuse. Unfortunately, Gavin Newsom has he tried to hide all those, fraud and waste under the carpet, allowing more than $32 million of unemployment fraud that went unchecked. The state has also watched $13 million stolen from California students because of the AI-generated ghost students enrolled in community colleges. I suspect this is just the tip of the iceberg in California's fraud, waste, and abuse. And I've been talking a lot about this. Unfortunately, sadly, the state that I love and I live and I represent a district from California has become a fraud capital of the world. So sad. But that's why we need your team in California. And is there anything that you can share to that end, how your investigation into California fraud is proceeding?
There's nothing I can share right now, but I have spoken to Dr. Mehmet Oz at HHS, and he is laser focused on the healthcare fraud that's going on in California, which seems to be substantial.
Yes, I also sent a letter to Gavin Newsom to that end, and I was glad to see Dr. Oz sending a letter demanding. So now state of California is now in the process of returning $1.6 billion to the federal government. So thank you for that, and I look forward to continue to work with you. Thank you for joining us.
Thank you.